After studying this module, we shall be able to know the meaning, features, and basic ingredients of a budget, understand the concept, advantages, and objectives of budgeting, know the elements of a successful budgeting plan, explain the planning and control process in budgeting, and identify the behavioral dimensions of budgeting.
We all make plans or budgets. Financial planning plays an important role in all the spheres of activities, whether we talk about households or business or government. Planning is the first basic exercise we undertake before venturing out for any other activity. Even though we are not aware, but seeds of financial planning are sowed in us right from our childhood. We have all witnessed our mothers making estimates of household expenses in the beginning of the month. How she would stop us from making unnecessary purchases to keep expenditure within limits. How she would tell us to manage the whole month in the little pocket money that we have. We have all seen our fathers making estimates of how finances would be arranged to meet the EMIs of the housing loan, car loan, scooter loan, etc. When we were students in the college, we had to organize college freshers party or farewell party or cultural events. We used to spend hours with our committee members planning about how the funds shall be arranged through sponsorship, entry tickets, subscriptions, voluntary donations, cultural funds, and how this collected fund shall be spent on catering, tents, decorations, DJs, food coupons to volunteers, souvenirs to be distributed, prizes, and so on. At the time of marriages, we see how the families of the bridegroom and the bride list out items of expenditure and allocate budgets for each head. Compare the actual expenditure with the planned one and express shock and worry at the deviations. Government also indulges in planning. Each one of us eagerly waits for the finance budget, railway budget, to get the feel of what the government has in store for the common man. Thus, if finance is the blood of business, financial planning is the blood of all of us. It is all pervasive and everyone, be it homemaker, traders, managers, government, business enterprises, salaried employees indulge in it. This module deals with significance of budgets, budgeting, elements of budgeting, their advantages, behavioral aspects of budgeting, and the ways of dealing with them.
The word budget is derived from a French term baguette, denoting a leather pouch in which money is put in order to meet expected expenses. Similarly, in business terms, a budget denotes a numerical statement showing how resources are to be required and used over a specified period in future.
Budget is an estimate of future needs arranged according to an orderly basis covering some of or all the activities of an enterprise for definite period of time. Some definitions. According to George R. Terry, a budget is a comprehensive and coordinated plan expressed in financial terms for the operation and resources of an enterprise for some specific period in the future. As per the opinion of James M. Fremgen, a budget is predetermined statement of management policy during a given period which provides a standard for comparison with the results actually achieved. Brown and Howard have described a budget as a plan quantified in monetary terms prepared and approved prior to a definite period for time usually showing planned income to be generated and or expenditure to be incurred during that period and the capital to be employed to obtain a given objective. The Chartered Institute of Management Accountants, London.
Some of the important features or ingredients of a budget are: number 1, a budget is a plan. A budget is a blueprint for the future action expressed in monetary terms. It is a roadmap prepared to guide the subordinates continuously while they engage in operations. 2. A budget is prepared in advance. Planning precedes an action. Similarly, a budget is prepared in advance so that one gets an idea about the future state of affairs and could therefore well equip itself to avoid any crisis later on. 3. A budget is concerned with operations as well as resources. A budget quantifies the revenues to be realized from products or services and the expenses to be incurred on goods or services. Further, it is concerned with the planning of various assets and sources of capital to finance these assets. 4. Budgets are prepared in financial terms. In an enterprise, the various activities and operations are expressed in different units. If they have to be integrated in a plan, they must be expressed in comparable units of measurement, say in rupees, dollars, pounds, etc. 5. A budget relates to a specified period of time. If a budget does not specify a time horizon, it will be meaningless. For example, if a budget prescribes a sales revenue of 10 crores, it makes no sense unless it qualifies that such a sales estimate is quarter-wise estimate of the forthcoming year. 6. A budget is comprehensive. A budget includes all the activities and operations of an organization in it. It covers the organization as whole and not just subsegments. 7. A budget is a coordinated plan. Budgets are prepared for different components, segments, divisions, or activities of an enterprise so as to take care of the situations and problems facing each division. The budget for each of the components is prepared in harmony with each other, resulting in a coordinated plan. Sometimes the word budget and forecast are used interchangeably. In some ways, they do look similar, like both relate to future events and both use predictions. However, forecast is concerned with probable events, while budget is concerned with planned events. Forecast may be done for longer time, but budget is prepared for shorter time. Forecast refers to the events over which there is no control, while a budget is an attempt to control the events. Budgeting is the formal process of financial planning using estimated financial and accounting data. It is the entire process of designing, implementing, and operating budgets. The main emphasis of this process is on provisioning of resources to support plans which are being implemented. According to the National Association of Accountants of USA, budgeting is the process of planning all flows of financial resources into, within, and from an entity during some specified future period. According to Betty, the entire process of preparing the budget is known as budgeting. According to Roland and Harry, budgeting may be defined as an act of building budget. Thus, budgeting involves studying of business situations, understanding the management objectives, and also the capacity of an enterprise. Budgeting is a planning function, while its implementation is a control function. A proper budgetary exercise is indispensable for the success, survival, and sustainability of a business firm. Budgeting has many objectives and functions, some of which are: number one, budgeting compels planning. The planning process in an organization starts with defining a company's broad goals and objectives, developing strategies to achieve the desired goals, and then setting up of the tentative schedules. A budget is one such schedule of proposed combination of the various factors of production. Budgeting forces an organization to change its informal reactive style to a formal proactive style of management. 2. Budgeting improves coordination. Coordination is achieved when all the factors of production and all departmental activities are synchronized and integrated to pursue the organizational goals. Budgeting helps in removing inconsistencies among the goals and actions of individual departments and reconciles their differences so that they work harmoniously. 3. Budgeting improves communication. Effective budgeting facilitates two-way communication within the organization. The top management communicates the goals and objectives of the organization in its budgetary directives. Similarly, budgeting enables employees at middle and lower level to contribute their own ideas and provide feedback on goals and objectives. 4. Budgeting provides a basis for control and performance evaluation. After receipt and approval of the budgets of various departments, these budgets become their targets that set desirable limits on their spending. When the budget period ends, performances are judged and responsibilities are fixed on the basis of comparisons made between actual expenditure and budgeted expenditure. 5. Budgeting enables effective and efficient use of resources. It benefits the organization in two ways, which are: budgeting forces management to make an early and timely study of its problems and generates a sense of caution and care, and budgeting provides a valuable means of controlling income and expenditure of a business as it is a plan for spending. 5. Budgeting instills cost consciousness within the organization and thereby stimulates scarce resources to be allocated in the optimal way. 6. Budgeting provides a mechanism through which managerial policies and goals are periodically evaluated, tested, improved, and established as guidelines for future reference. 7. Budgeting enables management to decentralize responsibility without losing control over the organization. 8. Budgeting provides a yardstick for measuring performance of departments and individuals working in the organization. This enables them to self evaluate their actions and take suitable measures to improve themselves.
According to the Chartered Institute of Management Accountants, London, budgeting breeds healthy competition, provides incentive to good performers, and gives a purpose to each individual in the organization, thereby increasing their motivation, morale, and productivity. Through budgeting, weaknesses, inefficiencies, and deviations are identified. Variance analysis will prompt remedial actions wherever necessary. Budgeting draws attention of management to information which has not gone according to the plan. This way, it goes with principles of management by exception, and management can focus their time and energies on this issue.
In order to have a successful budgeting plan, the elements of budgeting which are a must are: 1. Accurate forecasting. Budgets are made on the basis of forecasts, and so their accuracy depends on the accuracy of the forecasts. 2. Proper coordination. Since each budget has implications for the other budgets, proper coordination amongst different individual budgets and different departments is very necessary. 3. Proper communication. The individual budgets should be communicated clearly and timely to all the units in the organization, and their doubts and concerns should be clarified. 4. Organization wide cooperation. A budgeting plan will be implemented successfully if people are ready to accept it and cooperate with it. 5. Reasonable flexibility. Budgets should neither be too rigid nor too flexible. They should set targets which are achievable and realistic. If the situation warrants, then modifications in the budgets should be carried out. 6. Effective basis of evaluation. A properly developed budget can be used as a basis for the assessment of performances of operations, departments, and individuals.
Budgeting is a part of overall planning process. Planning involves deciding in advance what actions should be taken to help an organization to achieve its goals. Budgets are expression of these plans, only showing how the resources are to be acquired and used over a certain period of time. This way, budget is a means of translating the goals and strategies into operational terms. Planning identifies a desired output, while budgeting identifies inputs needed to achieve that output. Similarly, controlling is a process which involves using feedback on actual performance and results, comparing the actual results with plans, measuring the deviations, and finally taking corrective actions to bring future activities in accordance with plans. In budgetary control, this is what is exactly done. Actuals are compared with budgets, deviations are measured, variances are analyzed, and corrective actions are taken. Thus, budgeting is an integral part of both planning and control process. Behavioral dimensions of budgeting. Since planning, forecasting, and budgeting are not exact science, predictions made by them are not 100% accurate. All these processes are based on assumptions, approximations, judgments, and estimates which may not always turn out to be true. Further, the budgeting process involves human beings at all stages of formulation. Budgets are developed by people, budgets are executed by people, and budgets are used to evaluate the performance of people. Hence, management should take care of the behavioral and psychological effects of budgeting. It is a sensitive issue and management should try to tackle it very carefully. Stated are some of the behavioral implications of budgeting. Number 1. People associate the term budget with limiting expenditure, just as the terms restriction or rationing evoke negative emotions. Similarly, people are apprehensive of the word budget also. 2. They perceive budgeting as an exercise to squeeze out every ounce of productivity out of the employees or to identify poor performance. 3. The success and utility of budgeting depends upon the cooperation and participation of all the members of the organization, but in reality, budgets are imposed from above. 4. Generally, the top management retains total control of budgeting process and seeks only superficial participation from the lower level managers. This kind of pseudo participation, which pretends to be participation but is actually only a lip service, is a form of deceit. 5. Sometimes departmental conflicts arise because of the competition for the resource allocation of departments, start blaming each other and try to pass the buck when the targets are not achieved. 6. The process of budgeting is lengthy and time consuming. Lot of energies and time are spent in getting the budget prepared and approved. But dynamism in the environment causes change in the projections and budgets lose their appeal, creating frustration in the employees. 7. The budget process creates incentives among the managers to bias information that goes into the budget in order to get an increased allocation of resources for their department. 8. More resource allocation means larger funds at their disposal, higher status in the peer group, higher responsibilities and higher prospects of promotion. Only a larger budget can justify larger allocations, and so they tend to bias the information. 9. Since budgeting is used for performance evaluation, many a times managers take suboptimal decisions to show their good performance. For example, in order to keep their cost within the limits, a manager may cut expenditure on R&D, which may be detrimental to the overall interest of the organization. 10. Managers compromise on long-term goals of the organization in order to enhance their short-term performance. For example, delaying expenditure on urgent needs of repair or offering huge discounts to push up sales of the current period. 11. Budgeting may sometimes result in wasteful expenditure. This is because in order to fully utilize their allowances and to prevent future cutbacks, managers indulge in careless and unnecessary spending. 12. Sometimes managers tend to overestimate costs so that they are not held responsible for overspending. The difference between the minimum possible expenditure and the expenditure shown in the budgets is called slack or padding. Such practice is widely adopted by the budgetary managers to create a buffer for the expected cuts by the superiors in budgeted expenses proposed by him. 13. Budgeting tends to bring rigidity in the system. It does not provide enough elbow space to dynamic managers and restricts their freedom of action Further, sticking to budgets often leads to poor decision making. For example, to keep costs within limits, one may compromise on quality of inputs and go for the cheaper option.
Thus, we can see how budgeting causes dysfunctional behavior amongst the people, improper implementation of the budget, flaws in the budget preparation process, the unrealistic management expectations, dominance of selfish interest over organizational goals, etc., come in the way of reaping actual benefits from budgeting. Some principles which may prove helpful in tackling the behavioral problems associated with budgeting are: 1. Participative budgeting. Participation by subordinate managers in preparing the budget increases their initiative in achieving the results, creates a sense of responsibility, and also raises motivation, morale, and creativity of the employees. If subordinate managers are properly involved, the budgetary goals become their personal goals and these are readily accepted by them. 2. Top level management support. Top management should create a positive environment towards budget by giving impression to the subordinate managers about their commitment and support to the budgetary goals. Top management must review and approve budgets, take constant feedback, invite suggestions, and follow up the variances seriously. 3. Setting of realistic goals. To eliminate undesirable pressure, the budget goals should be reasonable and realistic. If targets are too high, they will be unachievable, causing frustration and resentment among employees. Similarly, if targets are too low, they will not remain exciting. The targets must be high enough to motivate but be realistic at the same time. 4. Transforming dysfunctional behavior into constructive behavior. Rigidity towards budgets should be avoided, and top management should always be open to amend the budgetary targets if earlier targets are found impractical and unfeasible due to some changed circumstances or other reasons. Further efforts should be taken to bring about goal congruence, for example, align their personal goals with the organizational goals by devising proper rewarding system. 5. Sound communication system. Expectations and goals of the top management should be communicated throughout the organization in a clear-cut manner. Further, the communication channels should be kept open so that subordinates can convey their problems, concerns, and apprehensions freely and fearlessly. Improvements and suggestions proposed by them, if found feasible, should be incorporated in final approved budget. 6. Sound motivational structure. Budgeting will be a fruitful exercise only if it brings motivation. This can be brought about by following the policy of fault fixing rather than fault finding. Instead of reprimanding a subordinate manager for not meeting the target, the effort should be directed to look into the real cause of deviation and take measures to plug them. Subordinates should be rewarded for achievements, and if there is a deviation, investigation into the reasons be done rather than interrogation. 7. Avoiding strict adherence to budgets. To minimize the negative effects of budgeting, enlightened management should not demand strict adherence to a budget. They should emphasize on careful spending. They should seek justification for overspending, and if justification is convincing, they should.
Let us now recapitulate what we have learnt in this module. The word baguette is derived from French term baguette, denoting a leather pouch. A budget denotes a numerical statement showing how resources are to be required and used over a certain period in future. Essential elements of budget are: 1. A budget is a plan. 2. A budget is prepared in advance. 3. A budget is concerned with operations as well as resources. 4. A budget is prepared in financial terms. 5. A budget relates to a specified period of time. 6. A budget is comprehensive. 7. A budget is a coordinated plan. 8. A budget is different from a forecast. Budgeting is a formal process of designing, implementing, and operating budgets. The main emphasis of this process is provisioning of resources to support plans which are being implemented. Some of the objectives or functions of budgeting are: 1. Budgeting compels planning. 2. Budgeting improves coordination. 3. Budgeting improves communication. 4. Budgeting facilitates control and performance evaluation. Besides, there are several advantages of budgeting. Some of those advantages are: number 1, budgeting generates a sense of caution and care. 2. Budgeting provides a means of controlling activities. 3. Budgeting instills cost consciousness. 4. Budgeting facilitates periodic review of managerial policies or goals. 5. Budgeting provides a yardstick for measuring performance evaluation. 6. Budgeting helps in identifying weaknesses, inefficiencies, and deviations. 7. Budgeting facilitates management by exception. Some of the elements of a successful budgeting plan are: 1. Accurate forecasting. 2. Proper coordination. 3. Proper communication. 4. Organization-wide cooperation. 5. Reasonable flexibility. 6. Effective basis of evaluation. And lastly, budgeting is an integral part of both planning and control. Now we will discuss behavioral dimensions of budgeting. Some of the behavioral dimensions of budgeting are: people associate the term budget with limit spending. Budgets are imposed from above and seek only pseudo participation from subordinates. Departmental conflicts arise because of the competition for the resource allocation. The process of budgeting is lengthy and time consuming. The budget process encourages the managers to bias information. Individual or departmental goals dominate over organizational goals. Managers compromise on long-term goals of the organization in order to enhance their short-term performance. Managers also tend to overestimate costs so that they are not held responsible for overspending. Budgeting leads to wasteful expenditure. Budgeting leads to unending spiral of slacks and tuts. Budgeting brings rigidity in the system. However, the modes of addressing the above said behavioral problems are: 1. Participative budgeting. 2. Top level management support. 3. Setting up of achievable and realistic goals. 4. Converting dysfunctional behavior into constructive behavior. 5. Establishing sound communication system. 6. Developing proper rewarding and motivational system. 7. And lastly, avoiding strict adherence to a budget or targets.